Hey, real estate investors, welcome back to the channel. If you're looking for ways to supercharge your property profits and slash your tax bill, then you're in the right place. Today we're talking about 3 powerful tax-saving strategies: Section 179D, Section 45L, and cost segregation. Now, before you start thinking that sounds like tax jargon on steroids, don't worry, I'll break it all down for you in simple terms. Think of it like unlocking a cheat code for your real estate business. So grab your favorite caffeinated beverage, sit back, and let's dive in. But before we do, don't forget to hit that like button if you love saving money. Because if you're not saving on taxes, what's the point of all that real estate hustle? And make sure to subscribe so you never miss out on our next awesome money-saving tip. All right, let's start with the basics. What exactly are Section 179D and Section 45L? They might sound like secret codes or secret agent numbers, but they're actually tax incentives that can put serious cash back in your pocket. So what are these sections all about? Let's start with 179D. This section is a tax deduction for energy-efficient improvements made to commercial buildings, including heating, ventilation, and air conditioning, HVAC systems, insulation, and lighting systems. If you've made energy-efficient upgrades, you could get up to $1.80 per square foot of your building's floor area. It's like getting a giant thank you note from the IRS for doing the environment a solid. So if you've got a commercial building, or you're looking at building one, this is a deduction you absolutely don't want to miss. Now, what about Section 45L? This one is another deduction, but it's for energy-efficient homes. If you build or renovate residential properties to meet energy-efficient standards, you could be eligible for a $2,000 tax credit for each home you qualify for. That's real cash money in your pocket, no deduction tricks or complicated forms. So think of it like getting a rebate check from Uncle Sam every time you build or upgrade a home that saves energy. Pretty cool, right? All right, now let's talk about one of the most powerful tools in a real estate investor's tax-saving toolbox: cost segregation. So what is it, and why does it work like a tax time machine? Imagine this. You buy a property for $1 million. Normally, the IRS would have you depreciate that property over 27.5 years for residential or 39 years for commercial. That's a long time to wait to get your tax break. But what if you could shorten that wait to just a few years? That's where cost segregation comes in. It allows you to separate the components of your property, like landscaping, appliances, and flooring, and depreciate them over a much shorter time. This means you can accelerate your deductions, which leads to massive tax savings in the first few years after purchasing a property. And who doesn't like the sound of that? It's like hitting the fast forward button on your tax savings. Instead of waiting 27 years to depreciate your property, you could be getting huge deductions on things like flooring, windows, and even furniture. Yep, furniture. Now you might be thinking, okay, I get what these strategies are, but how do they work together to maximize my profits? Well, let's look at an example. Let's say you've just purchased a large commercial property and you've made some energy-efficient upgrades. You can use 179D to get that $1.80 per square foot deduction for those improvements. But wait, there's more. You've also got cost segregation going on, which allows you to accelerate the depreciation on components like HVAC systems, windows, and even light fixtures. Now you're getting tax breaks on both the energy-efficient upgrades and the building components. Now let's throw in 45L. If you've built energy-efficient homes, you can claim a $2,000 credit per home you build or upgrade, making sure that you're not leaving money on the table. It's like going to a buffet and making sure you take 2 plates instead of 1. Why settle for 1 dish when you can enjoy it all? Let me give you a real-life example. Imagine you're an investor who buys a $10 million commercial building. You make $100,000 worth of energy-efficient upgrades. With 179D, you're eligible for that $1.80 per square foot deduction on your building. So, let's say your building is 50,000 square feet. You're looking at $90,000 in tax savings right off the bat. Next, you use cost segregation to break down the building into components and start depreciating them faster. In this example, you might be able to deduct another $500,000 in accelerated depreciation in the first few years. Boom! You've just cut your taxable income by $500,000. Now, let's say you've also built some homes and you qualify for 45L. If you built 10 homes and get that $2,000 credit for each one, you're looking at another $20,000 in tax savings. All of this combined could potentially save you well over $600,000 in taxes in just the first few years of owning these properties. That's not just a nice little savings. It's like finding a gold mine right under your feet. So, who should use these strategies? Well, if you own commercial properties, or if you're in the business of building and selling homes, then these tax strategies could be a game changer for you. Even if you're just getting started, the key here is planning. It's not about if these strategies will help, it's about how much you can save. And if you're not sure whether you qualify or how to implement them, no worries. There are tax professionals and cost segregation experts who can help guide you through the process and make sure you're not leaving money on the table. All right, tax-savvy investors, if this video has got your brain buzzing with possibilities, then don't keep this knowledge to yourself. Hit that like button and subscribe so you never miss a tip on how to make more money with your properties. And hey, if you know someone who could benefit from these amazing tax-saving strategies, share this video with them. It's like sharing the tax-saving wealth, and who wouldn't want to be the hero in someone's financial story? Thanks for watching, and I'll see you in the next one. Until then, keep maximizing your profits and saving big on taxes. Take care.